Welcome back, fellow traders. Sive is here with the ForexPeaceArmy.com. Well, today in the video we, as usual, consider a couple of moments. First is recent data that we've got from the Fed, gross domestic product, and actually a reaction that we see on the market. And as usual, we discuss and actually update our trading plan, what we intend to do in the nearest time. So first, speaking about recent data, you could see that although Jerome Powell said nothing, but gross domestic product report was very positive, so 3%, and actually contraction of the personal consumption expenditures index, the dropping of the inflation. I suppose that also make the Jerome Powell to make some more positive comments in relation to inflation. So he said that expecting that inflation will decrease. Anyway, so you can see that reaction supports the dollar currently, and that confirms our suspicions that something is really changing. So the signing of this tariffs plan with the European Union and the United States has changed mid-term trend on euro currency drastically. Why it is important? It's just because actually, if just in the weekend we talked about the Polish grabber here that has been formed on the weekly chart, here you could see that its total has been erased. So what we're going to do currently, first of all, speaking on the perspective of the next week, I would say that we should prepare for some bullish bounce to the upside. And why? Because if you take a look at the weekly chart, despite the grabber has been erased, market entering the area of the weekly support. So here's you can see natural support here, it's previous big consolidation. Here's also 1363 fib level and weekly oversold. That normally should trigger at least moderate pullback. So moderate on the weekly chart, it means on the daily it might be more or less significant. So somewhere to the 50% of this recent drop is easily could be seen with this jump. So concerning the possible downside targets where market theoretically could show the reaction, we will use as usual ABCD extensions on lower time frames, but here you could see that also we could use the extension of the butterfly on top. So I wouldn't call it as a butterfly just because butterfly should be butterfly sell on top and not the butterfly buy. But actually it sometimes helps to estimate some additional targets that actually might be formed. So in general, these extensions work also nice if you use it. So that's something like this. I just show you as a butterfly, but just you could treat it just by an extension of the most present upper direction. You can see it agrees with the 1356, 1341. This is 1.7 extension. Currently, I'm not considering this one. It's because it's too far. We are mostly interested with this level because you could see here is also 618 support, which creates with the weekly fib level confluence area, and we are getting really great support zone. So we have confluence, weekly oversold, daily oversold, great area for bounce. That's why maybe not today, but somewhere next week probably we should get something interesting around it. So I just take it off just to keep it clear. Now on the 4-time frame chart, this extension we already have considered. That's XOP, which also agrees with the same area, 1345, and I prefer to see that market will hit it first before we'll get any reaction. Now all eyes stands on the payrolls report tomorrow. So if it will be as good as a gross domestic product report, or at least not really very bad, we could see the touching of the XOP as well, because you can see how stubbornly market stands below the oversold, which is not typical for financial markets. Take a look what has happened last time. Just brief touch and immediately upward action. And that happens, this is normal reaction of the financial markets. Forex, bonds, stocks, commodities might be stand outside of the oversold bands for longer term, but financials usually shows fast reaction. The fact that euro currency stands so significantly oversold, it tells that well, it's significant pressure here. But in general, as I already talked about, this action in general, this big drop, is normal, because if you take a look at the monthly chart, you will see the market stands at the overbought area for a considerable period of time already, and sooner rather than later, but this should happen. So that in towards what we're expecting to do in general. So watching for the support and preparing for possible upward action. For today, I do not see a lot of things to do right now. The one thing that probably you could keep an eye on, something like this, since we deal with this recent grabber. So if you remember, yesterday we talked about two potential patterns. First is a grabber. It worked absolutely perfect, and you can see what has happened. Double repo has not been formed, just because market collapsed. So this potential setup has not been realized. It's not failed, it just has not been formed. Something like this probably you could try to consider today. The attractiveness of this guy, this kind of the patterns, just because you could place really very tight stops, so just about grabber at very small risk. Almost break-even trade was yesterday here. Maybe market will repeat something like this because XOP has not been touched yet. But for now, right at this point, I do not see any patterns. On the hourly chart, I do not see anything. Just collapsed here, some kind of the reaction stance while the major markets are closed, or just low activity by far. But closer to the American sessions, probably the situation might start changing. So that's why for any decisions, I prefer to get either patterns. And speaking about our major setup, I prefer to see first the reaching of the XOP. So if somehow you will decide to take the short position, be careful, because market stands at oversold. You of course could just stay aiming on the XOP target, but if you trade on intraday charts, it would be better to use classical targets of the grabber. So if you get the same grabber, better to out these lows, or at least tight stops when the market would taken out of these lows. Because classical approach for trading oversold markets, you should out at the previous extreme point. So this is a common approach for such situations. So that's probably all for now. That's enough for me. Just let's keep watching, see what will happen. And I think that next week is really promising to be very interesting, mostly because of this area.